In this video, let me share the shift in stock investing strategy that I'm implementing this June of 2021 and why I'm doing this in Gotrade, the new stock trading app that's called the Robinhood for the world or the Robinhood for non-US citizens. Now, because of Gotrade's features, a strategy came up to me that maximizes the features of Gotrade and can potentially give any investor massive passive income if done correctly. Well, how massive? Well, you can get up to 50% yield. Now, isn't that exciting? But before we get into that, if you're new here, welcome to the Dealmaker channel, where we talk about investing in multiple asset classes such as real estate and stocks. This video is not sponsored by GoTrade, so it is sponsored by me. So you might want to support me by hitting the like button because that helps the channel grow and I really highly appreciate it. So please hit that like button. And if you're getting a lot of high value information and you're feeling generous, now please consider buying me a coffee for only $5. Now you can check out the links in the description below how you can buy me a coffee for only $5. With that out of the way, let's get started. When I started investing in the US stock market, I only bought growth stocks because I got hyped when I saw how Amazon grew from $15 per share to $3,200 per share now. When you include stock splits, Amazon has actually grown more than 2,000 times. That's crazy, mind-blowing numbers. It may be hard for you to visualize, so let's check Amazon's stock price history. So we're here at macro trends, and this is Amazon's 24-year stock price history. And so as you can see from this chart, today, well, the past few months, Amazon has been going up and down between around $3,000 per share to up to $3,500 per share. But Amazon actually opened an IPO at $15 per share. But because of stock splits, so the split adjusted price is around $1.5 per share. So imagine that your $1.5 per share has now grown to around $3,200 per share. That's more than 2,000 times growth. And the crazy thing is, this is not unique to Amazon. Right? When we look at Tesla, so this is Tesla's stock price history, you can see almost the same pattern. So the split adjusted price for Tesla is around $3 per share. Now it's at around 500 plus to $600 per share. It actually peaked a few months ago at around $800 per share. That's about 200 times growth. And how about Netflix? Let's look at Netflix. When we look at Netflix stock price history, again, we see almost the same pattern. Starting out small, around it's even less than $1 per share. Now it's sitting going up and down between $500 per share to $550 per share. 500 times growth. But I realized that this growth happens over a long period of time. And in between, these growth stocks just go up and down. Right? So you can see here, it's going up and down in price. So you're getting paper gains and paper losses. But what will you do if, like in this case, if your shares grew already to 400 and then all of a sudden it goes down to around 260. So you lost almost 100 times growth. What will you do? Would you sell or would you buy more? Right? Apparently, in this case, buying more is actually a good move because the stock will go up in price. But everything so far has been paper gains unless you sell the stock. And once you sell the stock, then your investment is gone, right? Or how about in this case, right? From $1, your investment has already grown to up to 40 times. You have no idea that it's going to go up to 500. So from $1, it's already at 35. But and then it falls all the way down to $9 per share, erasing the 20 times growth that you have already seen. What will you do? Will you sell or will you buy more? So that is the hard thing for growth stocks, at least for me personally. What I realized is that I need to have something else in my portfolio to kind of balance those paper gains and paper losses. Because knowing my personality, I need to see some tangible gains, so not just paper gains or paper losses. So while I was thinking about this, I saw an article on the Motley Fool describing the amount of passive income that Warren Buffett was getting. So here is the Motley Fool article about Warren Buffett yielding at least 20% annually on these three stocks. And one of his longest tenured holding now has a yield of 52%. These are actually dividend stocks. So compared to Amazon, Netflix, and Tesla, these stocks, they don't give dividends. Compared to those, some of his stocks have yielded 20% or more. Okay, number one, the top is Coca-Cola, giving Berkshire 52% annual yield relative to initial cost basis. So what this means is relative to the original purchase of Warren Buffett or of Berkshire, Coca-Cola is now giving it 52% annual yield. Berkshire owns 400 million shares and they bought that at 1.299 billion. So that works out to $3.2475 per share. So that is the average cost. That's the initial cost basis for all of those 400 million shares. Coca-Cola has raised its annual dividend for the 59th consecutive year. So that means 59 years ago, Coca-Cola made a decision to increase its dividends on a yearly basis. So for the 59th consecutive year, so this is older than me. This tradition has been older than me. They have increased their dividend now to 1.68, so $1.68. So that means Warren Buffett bought shares at around $3.24 or 25 cents if you round that up. And for each share bought at $3.25, he is now getting an annual dividend of $1.68. So that's why he has a yield of 52%. So if you're able to buy a company that increases its dividend throughout the years, then your yield will actually increase. It will go up in time. Let's look at the others. Okay, so this next one is Moody's. That gives him 25% annual yield. The initial cost basis is $10 per share. And now the annual dividend is at $2.48 per share. So giving Berkshire and Warren Buffett 25% per year. And the third stock that this article points out is Amex or American Express, giving them 20% yield. They bought it at an initial cost basis of $8.49, and now it's paying $1.72 annually. 20% annual yield for Warren Buffett. So when I saw these numbers, I realized that I need to mix these kinds of stocks into my portfolio. So I realized that for myself, I am not satisfied with just paper gains. So I also want to get passive income, because that passive income is what I can use to now compound and make my account actually grow. So unless I buy and sell growth stocks, and right now I don't know how to properly buy and sell growth stocks. Because if I sold Amazon, say if I bought Amazon at $15 per share, then it goes up to $100 per share. Should I already sell my Amazon and buy other stocks? And then I would see that Amazon grew from $100 per share to $3,000 per share. And that would just really make me regret selling Amazon. So it's going to be difficult without knowing how to properly time those trades. And to be honest with you guys, I'm not yet very good in market timing. I don't know who is good at market timing. I know that there are people out there that are good at that, but right now I still have to learn that. So I realized that while I'm learning these market timing things, while learning how to buy and sell stocks at the right prices, I realized that I needed to have dividend stocks in my portfolio so that I can compound a portion of my portfolio over time. And compounding is the best friend of many beginning investors. Albert Einstein called it the eighth wonder of the world, right? Compounding interest. Now, if you don't know how powerful compounding interest is, you can let me know in the comment section below so that I can explain that in a future video. But you can search in YouTube, how compounding works. But that's just what I realized. So for me, it's not enough to have paper gains and paper losses. I needed to have something that I can compound over time while I'm waiting for these growth stocks to 10x, to 100x, to 1000x. So I need a mix of that. So remember, this is not investment advice. So I'm not a financial advisor. So I'm just a guy in YouTube sharing what I'm learning in the US stock market. Now, this is my investment personality. You have to take stock of what is your own investment personality. Like maybe if you're young and you're aggressive, then maybe you don't need dividend stocks. Or maybe you're already a grizzled stock market veteran. You already know how to time the market. And then you can maybe compound your gains by doing all of these short-term or medium-term trades. So that's up to you. What I'm saying is, personally, for me, I need stocks in my portfolio that also give me dividends that I can compound. And that's the great thing with using a platform like Gotrade, because Gotrade allows you to buy fractional shares and you can buy for a minimum of $1, right? So even if you only get a $1 dividend, then you can already compound that. Or you can buy more shares of whatever the stocks it is that you're trying to accumulate. You can't do that with other platforms. So like with eToro, eToro has a $50 minimum transaction cost. You need to have a bigger portfolio to get $50 dividends. For us smaller investors, and maybe for you guys who are just starting out, you can't do that in eToro. Now with other platforms, they don't allow fractional shares. No, they don't allow you to buy fractional shares. So like with TD Ameritrade, you can't do that. Trading in interactive brokers is not commission free. Unlike GoTrade, where trades are commission free, you can buy fractional shares and there is a very low minimum transaction amount of only $1. So this strategy actually fits GoTrade very, very well. So for GoTrade, I'll be having a mix of growth stocks and dividend stocks. But I won't be buying just any dividend stock. So we still need to do our due diligence. Personally, I always do due diligence. So for me, I'd like to see stocks that give a high yield, preferably at least around 4% or more. And it must be a stable company that still has potential for growth. So like Coca-Cola, that company was able to raise its dividends all throughout the year. So I'd like companies like that that have the ability to continue growing while giving dividends, and they have the ability to increase their dividends over time so that I can increase my yield over time as well. So one of my long-term goals is when I retire, I want to be receiving passive income from my US stocks portfolio. So ideally, I'd like to receive at least $2,000 of dividends per month from my US stock market portfolio. So that is my long-term goal. That is my strategy. And so after sharing that with you, now it's your turn. So please tell me in the comment section below, what strategy are you implementing in GoTrade or in any stock trading app that you're using, right? So will you implement this dividend compounding strategy or not? So please let me know in the comment section below. In my next video, I'm going to reveal one of the stocks that I'm buying that implements this strategy, this shift to dividend stocks. So this stock is already giving a yield of 7%, so a massive, massive yield of 7%. If you want to know what that stock is, make sure to subscribe to the Dealmaker channel and hit the notification bell button to be alerted whenever I have new videos released. If you're a complete beginner, check out the free stock investing course right here, or check out one of the stock analysis videos right here. It's always a great day to make deals, and may all of your deals push through. See you in the next video.